everyone. My name is Tushita Berry, and I will be presenting today a comprehensive analysis of Microsoft, a company that needs no introduction in the technology industry, since we all know it is a well established and known enterprise. We will explore its financial forecasting, policy enhancements, and the critical role that stocks, bonds, and the market plays in their financial landscape. Firstly, going over the company overview. Microsoft, established in 1975 by the great visionaries Bill Gates and Paul Allen, is a globally renowned tech powerhouse. Its core expertise lies in developing, producing, and distributing tools for both private and commercial use. Its key products in its diverse portfolio include the iconic Xbox game console, the indispensable Microsoft Office suite, and the Windows operating system. The financial analysis journey begins with an examination of Microsoft financial statements from the past 3 years. We have projected their financials up to the year 2030, which anticipated Microsoft's growth will be around 77% by the year 2030. According to the projections in the previous slide, Microsoft is expected to increase in net current and future worth between 2024 and 2030, also anticipating a gradual sales growth rate of 8 to 10% annually. This growth is attributed to Microsoft's dominant position in the technology sector and their ability to adapt ever evolving market trends. This implies that Microsoft is anticipated to be quite lucrative over the following 10 years, and that the business has promising growth possibilities. However, I must recognize the necessity of adjusting finances procedures to sustain this growth. Keeping that in mind, I would recommend some policy changes, which would be first, inventory management enhancement, focusing on improving inventory management to reduce excess inventory holding cost. Second, operational cost management, which would be concentrating efforts on managing operational cost to strengthen the company's financial position. Third, debt to equity ratio reduction, implementing strategies to lower the debt to equity ratio, enhancing financial stability, etc. Fifth would be to increase research and development spending to foster innovation and maintain competitiveness in the market. To ensure and focus more on financial long term health for Microsoft, I would also give some more recommendations. First would be more funds for investment, enhancing cash flows to allocate more resources for investment, including opportunities for research and development, acquisitions, and the market expansion. Second, would be reducing reliance on present good, which would be decreasing dependencies on existing product lines for immediate revenue, fostering adaptability to market changes and new opportunities. Third, would be utilizing freed up funds to explore new markets and products, mitigating risks associated with a single product or market. Fourth, would be stabilizing budget and cash flow by creating a more balanced financial portfolio to enhance resilience to economic downturns and disruption, which would ultimately result in ensuring long term financial health. While talking about financing options, let's see how for profit and non profit organizations behave in the same substance. Both for profit and non profit organizations have distinct paths. For profit business can opt for equity financing to attract investors for capital or debt financing with repayment over time, whereas nonprofit organizations typically rely on fundraising activities, contributions, and grants to secure funds for their missions. In the view of the above, investment strategies for profit and non-profit organizations differ greatly. Let's dig into why. For profit businesses have equity financing, which obligates a return on investment to shareholders, potentially influencing decision making. Debt financing involves repayment with interest, impacting liquidity and financial stability. For nonprofit organizations, donation based funding mandates responsible and efficient fund utilization, ensuring accountability to donors and stakeholders. Whereas grant funding requires adherence to guidelines and objectives to align with the organization's mission. However, both for profit and non profit organizations rely on stocks and bonds to varying degrees. While market factors like interest rates, inflation, and consumer confidence exert a profound influence on investment decisions. While examining Microsoft performance, we notice steady growth in its stock and bonds over the past 5 years, attributed to their successful financial results and strong market position. Positive stock performance, which is an indicator on investor confidence, reflecting Microsoft's innovation and profitability. Stable bond performance underscores Microsoft's creditworthiness. However, it's vital to acknowledge that external factors can impact asset values despite their strong performance. Now let's calculate and see how did the Microsoft stock price and bond price did for the week of October 9th to October 16th. I used the data for Microsoft stock price from October 9 to October 16, having the stock price on October 9th as $220.63, and October 16th it fell down to $214.22. How we would calculate the stock price return would be deducting the beginning stock price from the ending stock price and dividing it by the beginning stock price. To calculate the bond return, we would use the data from Microsoft's bonds that were due in 2023. On October 9th, the bond price was $98.37, and on October 16th, the bond price was $98.12. The annual coupon payment is $13.50. So to calculate the bond return, we would subtract the beginning bond price from the ending bond price and add the annual coupon payment. And then we would divide it by the beginning bond price to calculate the bond return. Therefore, for the week of October 9th to October 16th, Microsoft stock return was negative 2.91% and bond return was 0.25%. In conclusion, the key elements for Microsoft's development and stability involve financial forecasting, policy enhancements, and the significant role played by stocks, bonds, and the market. These elements are not just crucial for Microsoft, but for all for profit and non profit organizations as they influence financial destinies and investor confidence. Microsoft serves as an illustration of how sound financial management and investments can lead to long term success. As I conclude my presentation, I would like to reiterate the recommendations that I would make for Microsoft. First would be streamlining business process for enhanced efficiency and productivity. Second, strengthening financial position by maintaining a healthy balance sheet and preparing for unexpected financial challenges. Third would be diversifying revenue sources to explore new markets and reduce dependence on core products. Fourth would be monitoring investments with regular assessments and adaptability to market volatility. Fifth would be to develop a contingency plan to ensure business continuity and risk mitigation in the face of potential market downturns or disruptions. By incorporating all of these recommendations into their strategy, Microsoft can continue to lead in the tech industry and remain resilient in the face of evolving challenges and opportunities. Thank you so much for joining me today in this presentation, and I really look forward to discussing these recommendations further and implementing the suggested strategies to steer Microsoft towards continued success in the ever evolving technological world.